Hi, everyone. Hope you all had a relaxing long weekend. Thanks so much for joining us for a webinar on managing sales tax exemption certificates. Your presenters today are Tax Connect's partners, Brian Greer and Jeff Meggs. Just a few housekeeping items before we get started. All your lines are on mute and will remain on mute throughout the webinar. As a reminder, this webinar is not eligible for CPE credit. A recording of the webinar will be emailed out later this week, but you can find the slides in the handouts portion of the GoToWebinar panel. If you have any questions, please submit those within the questions box and we'll answer those as we go along. We'll do our best to get to all the questions, but if there's anything that should be answered in private or we can't get to them all, we'll respond to those afterwards via email. Thanks again for joining us, and with that, I'll go ahead and pass it over to Brian.
Yeah, thanks, Kate. Appreciate the introduction as always. And as we were kind of prepping here over the last couple of minutes, we were shocked at how many people have signed up for this webinar the day after a holiday. So hopefully we can do it justice. This seems like a topic that a lot of people are very interested in. We've already got some questions flowing in. So keep those questions going throughout the presentation. And we'll get to some of those, as Kate mentioned, during the presentation if it kind of fits the topic that we're on. Otherwise, we'll save those for the end. So, exemption certificates and the requirement and the importance of them, I feel have changed a little bit since Wayfair. So, in the past, when businesses didn't necessarily have the requirement to collect sales tax, there was often a use tax obligation by the buyer. But now in this post-Wayfair scenario, we see more and more businesses charging the sales tax. And as a result, we see companies that maybe in the past have been able to purchase basically on a tax exempt basis, but just from the perspective that their seller, their vendor never charged them the sales tax. But now that sales tax is getting charged, it's becoming more important to have the proper sales tax exemption certificates to submit to your vendor. And also, and this is kind of a theory of mine, and I don't know, Jeff, if you've seen this play out from an audit perspective, but again, because of this post-Wayfair scenario where there's more sales tax being charged, a less requirement for businesses to accrue and remit the use tax under audit, the auditors, again, this is my theory, rather than focus on use tax accruals, are really scrutinizing exemptions and exemption certificates. So it's kind of a twofold scenario here that we're seeing the importance of these certificates rise over the last few years. So with that as kind of a backdrop, I'm going to flip it over to Jeff and kind of dig right into the agenda here and the first topic. So first question is, so what is an exemption?
Yeah, so as you can see, the agenda kind of walks through a few of the characteristics of exemption certificates. And yeah, what is an exemption, or why do we need exemption certificates? And the short answer to that is the states, in terms of those that impose a sales tax, generally legislate that the sale at retail of tangible personal property or enumerated services are taxable. And so in the absence of some specific exemption or exemption documentation, you have to tax that transaction if you have nexus in that jurisdiction. You have an obligation to comply with the tax laws of that jurisdiction. So what we want to differentiate is an exemption versus what we term an exclusion. And so as I described, the legislation typically starts out with the retail sale of tangible personal property and enumerated services. If something's not tangible personal property and it's not one of the listed services that the state has legislated to be taxable, then we call that something that is excluded from tax. An example of that is the services that Tax Connect provides to its customers in the state of Georgia, and in most states, frankly, are excluded from sales tax. They are considered or deemed the equivalent of professional services, and professional services are generally not an enumerated service that's subject to tax in most of the states, almost all the states. So in the event of an excluded item, i.e. the services that Tax Connects performs as an example, we don't need an exemption certificate. We don't need to issue exempt certificates. We don't need to receive exemption certificates or obtain certificates from our customers. Our customers are receiving an excluded service that has never been set out to be taxable to begin with in the majority of the states. So again, an exemption is something that is otherwise taxable, but for the fact that there is a particular scenario that creates an exempt situation for that particular transaction. We're going to talk through a little bit of different components of exemptions, one being the categories of exemptions. Another is the types of forms that we might see in the exemption certificate world for sales tax purposes. And then we will get into a little bit of how do we manage exemption certificates, and then really talk about what does that management look like in execution within a billing system or within an ERP. So with that, let's look at the categories of exemptions. And there's really three primary categories. There's the type of commerce that's being executed, and that's a resale scenario as an example, meaning I'm buying that tangible personal property that is otherwise taxable for sales tax purposes, but the reason I'm buying that property is so that I can resell it to another person or entity. And that retail sale is happening when I resell the item. So if you're familiar with sales tax, this will seem fairly obvious to you, but if you're operating in a foreign land and you're more accustomed to what's called a value-added tax or a VAT, this will be a little bit different. In a VAT scenario, every instance of commerce generally is assessed the VAT, the value-added tax. And then there are credits or absorption of credits that are taken through that stream of commerce. In the U.S., for sales and use tax purposes, the tax is intended to apply on the final retail sale of the property or enumerated service. It's supposed to be or intended to be imposed on the end user consumer. So resale transactions are the most common occurrence, I would say, of exemptions in the U.S. Those are the exemptions that all of your retail stores are executing. Everything Walmart buys that it stocks on its shelves as inventory for sale is purchased under an exemption certificate that it would have issued upstream to its vendor or distributor. The next category of exemption is how is that property being used? What's the purpose of that purchase? And so in this category, now we're actually talking about and looking at an end user consumer, a manufacturing operation, a farmer. And there are a host of exemptions, depending on the states, that are afforded these types of entities on their purchases of certain tangible personal property that are used in the performance and facilitation of those activities. Why do these exemptions exist? A whole host of reasons, primarily because we want to afford organizations an opportunity to build a business, to start employing individuals, to create products that are essential, if not at least desired by the common consumer. So manufacturers, a lot of times jurisdictions are offering them different types of incentives, but a standard incentive that typically exists in most of the states is a sales tax exemption on their purchasing of manufacturing equipment. It also extends to raw materials that are incorporated into the manufactured product. It's similar to a resale exemption certificate when you talk about raw materials, but depending on the state, there's a specific category that applies to raw materials. In agriculture, something similar exists. I mean, we want to promote agriculture. We all need to eat. I, in particular, am a big fan of eating. So agricultural exemptions are important to me. But what this basically says is equipment that is purchased by a farmer in the performance of their agricultural activities. And agriculture can extend beyond just crops. It can be any cattle, food, raising of chickens. There's a lot of activity that fits within the agricultural arena, and there are specific exemptions that are available to those entities on their purchases of equipment and tools and things of that nature. The third type of category or exemption type is the type of entity that exists. And in this category, we have government agencies, we have nonprofit organizations, and then we have some educational institutions. And there's others. These are just examples and highlights. What's important to understand about any of these exemptions outside of resale is the states can vary as to what level of exemption is applicable or whether or not an exemption is applicable. There are states that do not exempt state or local government from sales tax. There are states where nonprofit organizations have to pay sales tax on their purchases. So you can't blanketly apply any type of an exempt philosophy for legal entity structures across the states. And that's why with exemptions, we need a document. We need some level of support, some level of documentation that alleviates the purchaser from the risk of selling a tax-exempt item to an otherwise taxable customer. Within the legal entity activity, government does not include, for this purpose, federal government. Federal government is exempt from sales tax in all cases. I will caution you, the state of New Mexico, and there are some other states where this could apply, but the state of New Mexico in particular, their sales tax is essentially a gross receipts tax. We tend to use sales tax as a term across all the states where there's a transaction tax involved. But it happens that in New Mexico, because it's a gross receipts tax, there's not a tax on the sale to the federal government. There's a tax on the gross receipts that are received in the sale of property to the federal government. So in New Mexico, the federal government itself is not exempt. But New Mexico does have some other exemptions that apply.
And Jeff, just a kind of an interesting side note, I've had quite a few conversations with nonprofit businesses, and what we're talking about here specifically applies or could apply to their purchases. Excuse me, but sometimes there's this misperception that because I'm a nonprofit, I don't have to charge the sales tax either. And obviously that's a completely different topic and subject, but we're certainly focused on the purchase here and the potential exemption that goes along with the purchase and not necessarily the sales activity of a nonprofit, for example.
Yeah, very good point. There definitely are activities that get some special treatment on the sales side when it comes to nonprofits or educational institutions, which we don't plan to talk about here, so good point. So categories of exemptions, from my perspective, kind of fit into those three primary categories. And the next slide talks about the types of exemption certificate forms. Again, anytime we're talking about an exemption, other than maybe the sale to the federal government, we need to substantiate, or our customer needs to substantiate that exemption. We just can't take it based on what they tell us, or even based on what they indicate in a purchase order. It has to be substantiated beyond a reasonable doubt that they are qualified to purchase something from exempt or something from sales tax. When we talk about a tax exemption form, essentially what we're dealing with is an affidavit. And in most cases, these are signed documents. We'll talk about each one of these sort of examples, and not all of them have signatures. But the majority of the time, somebody is making a representation, a legal representation, and they are putting themselves at risk if they make an erroneous representation in that regard. So the primary categories of exemption certificates kind of fit into these five categories. I'm asked oftentimes by clients, can you provide me with a sort of scope or list of all of the valid exemption certificate forms? And my answer to that is no, it's not really possible, because there's an infinite number of options that exist. And we'll see that when we talk about the last bullet on this slide, the custom form. State issued forms are not common, but they exist in a few states. Florida is a really good example that they have established a state issued form that is available on their website when you log into your sales tax account. It is renewed on the 1st of January every year, so it expires on the 31st of December every year. So you're consistently having to update that form with your vendors, or if you are a vendor, you need to consistently get an updated form from your customers if they intend to issue an exemption certificate in Florida. It is a pre-printed form. It does not have a signature on it. It stipulates the type of exemption as well as the period that the exemption applies for. The second and maybe more common type of exemption certificate is what we're probably a lot of us on this call are accustomed to seeing, and that is just a form template that's published by the state. The majority of the states have their own sort of format that they make available in their forms database online. And it's a matter of checking a few boxes, filling in a few blanks. Some of the key elements, as we talk about here in the takeaway box at the bottom of the slide, are we need a company name, the buyer's name, the seller's name as well. We need the buyer's sales tax identification number. We generally want to see, or jurisdictional forms like to prescribe, that we identify the types of items being purchased. And that can be more or less a categorical definition. For instance, you might just select tooling for machinery and equipment, things of that nature. We need a reason for the exemption. Again, depending on the form and the template, it may have an option to select any one of a number of exemption types, like manufacturing, like agricultural, like resale, like raw materials. So generally we need an exempt reason. It's either a checking of the box, or there's usually a box that you can fill in free form. And lastly, and probably most important, is it needs to be dated and signed. That level of representation is really the key to making sure that when you accept that certificate, you've accepted it in good faith and you've performed a decent level of diligence in the acceptance. The next couple of certificates are kind of interesting and very common. The first is the multi-jurisdictional resale certificate. You can find this certificate published on the Multi-State Tax Commission website online. And this certificate, I believe, encompasses 34 states currently, meaning there are only 34 states that recognize this as a valid option in terms of representing a transaction that's exempt. And it is primarily and exclusively a resale exemption certificate. So it's not something that should be used to validate a manufacturing use of tangible personal property. There are a host of exceptions on this certificate. In some cases, the states do not allow this certificate for the purchase of services for resale, only tangible personal property. There's probably about 4 pages of actual footnotes that go along with this certificate. Some of them are a little bit ridiculous in my opinion, but it's a good idea to kind of familiarize yourself with that form. It's a very commonly used form. It kind of gets rid of a lot of paperwork for a lot of us, and so it's something you should expect to see from time to time. Less common is the streamlined sales tax exemption certificate. You know, the streamlined sales tax program, SSTP, as you might know it, that exists and has existed now for about 27, 28 years, intended to try to simplify sales and use tax across all the states. I would not call it overly successful. I think it's had some elements of success, and depending on your operations and activities in states in which you operate, you may find the program to be very valuable. But the purpose of talking about it here is that in those states that participate in the SSTP, of which there are about 24, there is a form, a template that can be used almost like the multi-state jurisdictional exemption certificate, except it can be used more broadly. And so just being aware that that exemption certificate exists out there, it may or may not apply to a specific jurisdiction. But I do believe, interestingly, that this certificate, its components are, for the most part, in line with that takeaway box at the bottom of this slide, and as such could be used outside of the SSTP states because it meets those fundamental criteria in a lot of cases. But it's something you just have to validate state by state. Lastly, a custom form. Many of the states will afford you the opportunity to create your own form, your own template. Usually this comes out on somebody's letterhead, and it can be multi-state, it could be a single state, and usually if it has these key components of a valid exemption certificate, it will be accepted by the states. I can't tell you that every state's going to accept every custom form, and that's where it gets a little challenging. And you really have to understand what the requirements are in that specific state before you can accept a custom form or before you go out to issue a custom form. And a custom form, you know, we've helped clients under audit where companies that are very well-known companies, probably well-known to most, if not all of us on this call, have created custom template forms that say, we are claiming exemption from sales tax. We will take on the responsibility of our sales and use tax requirements by state. There's no representation of why they're exempt. There's no representation of the type or category of exemption on that letter. They're simply stating they do not want to be charged sales tax. They want to figure it out on their own and either accumulate or accrue consumer's use tax, or maybe it does qualify for a specific exemption. These types of forms should not be accepted. A company can't just systematically call themselves exempt or take a stance that they'll assume the responsibility for sales and use tax. There has to be a valid reason, and they have to be validly established in that jurisdiction to be able to afford that exemption pass-through.
So Jeff, we got a couple of questions here, and I'll let you take the first one, and I'll take the second one. But Jonathan is talking about a exemption certificate that's dated for the current year, so 2025. Are you able to utilize that or apply that to prior sales activities, or is it only for, you know, that date forward that you received the exemption certificate?
Yeah, this is probably the trickiest question that we encounter. The best way to answer that is you need to get an exemption certificate, and we're going to talk about that in the next slide, that's dated on or about the same date of the transaction to which the exemption is applying. Some states have some literal language talking about 90 days subsequent to the invoice, a certificate can be deemed valid, and that's the execution date. But I would strongly encourage you to obtain exemption certificates on or at least very close to the date of the transaction to which you are trying to substantiate, or your customer is substantiating that exemption. You are running the risk of a state looking at your documentation and disallowing those types of exemption certificates that are dated a year later, 6 months later. And the reason I say this is a very tricky question is the reality, the practice that we typically see or are accustomed to seeing is that under audit, it's more likely than not, an auditor is going to give you an opportunity to go back and either get a certificate that doesn't exist or get a certificate that's dated appropriately as it relates to the date of the invoice of the transaction. That's the practice that we see the states employing. And so I don't encourage you to bank on that practice. A lot of things happen between the day of the invoice and the day they come knocking on the door for an audit. Companies go out of business. Companies can refuse to issue an exemption certificate. Once that transaction has occurred, the invoice has been paid and issued, that transaction's done, and the buyer does not continuously have an obligation to you as the seller for sales tax on that transaction. They may inherit a consumer's use tax liability on that transaction, but at the time the auditor knocks on your door, you're going to be the party that they seek restitution from.
So Jeff, I'll take this question from Ellen, and she asked, if a company buys items for inventory that will be resold at the end, does the company need to pay tax on the purchase? And what I suspect is happening here is that the vendor is going to want to apply sales tax based upon the ship-to location of that, where that inventory is being stored eventually, or shipped to and then stored in that warehouse. So from a purchasing perspective, you would want to issue a resale exemption certificate, again, based on where the ship-to location is. And then you have the responsibility to charge the applicable sales tax upon the final sale. Or in some cases, companies may purchase products and store an inventory, but then draw them out of inventory for their own use. And in those scenarios, if you had previously issued that resale exemption certificate, now you've got a use tax obligation based on your use of that inventory that you've now pulled out and used for yourself. So hopefully, Ellen, that addresses your question. And I told you we we're going to have two questions. I'm going to throw another one here at you because I think it's right in line here with the exemption certificate forms. And I haven't heard this before. So are retailers required to accept exemption certificates?
No. You know, as a business, you can elect to decline an exemption certificate, even though that certificate may otherwise be valid. You know, there's a lot of experiences companies have gone through, and they've found themselves behind the eight ball relative to sales tax risk and exposure. And some companies just decide, hey, I just can't afford to take on any risk because my business is such that we don't have a good way of getting exemption certificates and confirming them. And so we either have to go all in and tax everybody, or we have to just exempt everybody. And there's really no in between that's good for our business. And so we're just going to assume everything's taxable, and customers can go pursue, in some cases, a refund directly from the state on those taxes if they deem them not to be taxable. But the short answer is no, you don't have to. You know, obviously the customer also has an opportunity to go buy somewhere else. And so those options typically lead people to some level of accommodation.
Yeah, and I suspect you probably get into some scenario where the purchaser just short pays the invoice, and now what do you do with that, where you've got an open receivable?
Yeah, it's challenging.
Yeah.
Because the states do afford most of the states afford some degree of bad debt write-off, and whether or not a short paying of the tax on an invoice qualifies for that bad debt write-off, you'd have to look at that on a per state basis. But I think it would be a losing proposition to operate under the premise that that is always going to be something you can write off. So we've talked about the categories, the types of certificate forms. Let's talk a little bit about what it feels like, and I think some of the questions the audience has already posed probably has been touched on with some of these bullets on this slide. But let's talk about, you know, how do we operate? How do we facilitate on the receiving end of a certificate? And again, I think it's always wise to try to have a process in place that you attempt or do your best to obtain that exemption certificate at the time of the invoice or shortly thereafter. You know, the other thing that tends to happen a good bit is in some of the state forms, the templates themselves, they'll have a box at the very top that'll basically say, is this a blanket exemption or is it a one-time exemption? that's intended to afford some degree of flexibility on both the buyer side and the seller side. But you do want to be a little bit careful with that. If you are a company that sells a broad spectrum of products and supplies, you might get an exemption certificate from a customer that's buying a lot of things for use in their manufacturing operation that do qualify as exempt. And they'll check the blanket box because everything they buy generally is going to fit into that category. And then every once in a while, they also buy paper towels or some other office supply from your company that doesn't qualify as exempt. And most companies, when they see that blanket exemption certificate, tend to apply that certificate across that broad spectrum of activity that they engage in selling. And the state's going to come in and look at that certificate and say, no, this certificate was intended for manufacturing equipment. You sold paper towels. That's just not going to fit. And they're going to hold the seller liable under those conditions for the sales tax on those paper towels, more often than not, or more likely than not. So just be a little bit cautious when you see that blanket application, and we'll talk a little bit about that in the next slide as well. The other thing, when I described that Florida exemption certificate earlier, it has an annual recurring renewal. There are some other states that limit the time frame of validity of an exemption certificate. What I would say to you is majority of the time, certificates don't expire. But I think it's a wise approach to think about them expiring every 3 years, if it otherwise isn't stated on the form itself. So in Florida, you've got to update it every year because the form itself indicates its expiration date. In the absence of an expiration date, you can roll the dice and just assume it's in perpetuity. But I would encourage you every 3 years to go ahead and update your exemption certificates with your customers. It's just a good exercise. It keeps you in compliance and keeps things more or less fresh. And lastly, I think I talked about this in one of the answers to one of the earlier questions. What happens under audit if I don't have all of my exemption certificates? More often than not, the state is going to give you an opportunity to go back and try to recover those certificates. It's very common that opportunity is given, but what I can tell you is your customers, most of them are not going to pay much attention to those requests. They're going to have a hard time getting those certificates after the fact. The fact of the matter is, when you have leverage is when you can put tax on that invoice and make that customer liable for that tax payment. That's your best leverage to get a form. Once everything's been done in terms of invoicing and payment and shipping of the product, you're going to find that people are not very responsive to a request for exemption certificate. You almost have to use some threatening language to get them incentivized to give you a certificate under audit. And lastly, there are some software solutions that help you. If you've got large volumes of exempt customers and large volumes of certificates you're trying to manage, there is some software tools out there that can be beneficial in that regard.
Yeah, Jeff, just kind of on that same path, I was trading some messages back and forth with one of the, I almost said one of the contestants, but one of the attendees. And we were talking about gathering these exemption certificates, and it sounds like they've got a requirement at the time of purchase, maybe even through an online transaction, to gather those exemption certificates. And we are referencing some of these software tools. And the one that I had shared in the chat was Certify Tax. And when you try to gather these certificates in real time to make a real-time decision, there's challenges to that. And what I was trying to describe in the chat is that, for example, Certified Tax is going to have a really nice, I call it a forms wizard on the front end that can be kicked off during that purchase cycle or that purchase transaction. And if the customer is willing to walk through the steps to electronically fill out a certificate online and submit it online, you can set up those tools to essentially auto-accept that certificate as a valid certificate and then move on to the sale of the actual product. However, the potential risk there, one of them, is that sometimes customers don't want to go through that forms wizard, and they've got their own certificate that they've already filled out, they've already completed, and they want to upload that in some type of PDF form image. And in that scenario, it's very, very difficult, if not impossible, to truly validate that at the time of the actual checkout and transaction. So you're kind of stuck in the scenario of what do you do from a tax policy perspective? Do you go ahead and not charge tax, and as long as they've uploaded something, and then review that transaction after the fact to see if you've got a valid certificate or not? So yes, there's definitely tools that help, but it's never a one size fits all, and you got to kind of work it into your overall tax policy and the kind of the user experience also that I think you want your customers to have. All right, last topic before we get to questions, Jeff.
Yeah, I liked everything you said there, Brian, and a lot of what you said is going to have applicability for this next slide. Setting up a customer as exempt within your billing system, maybe within a third-party software solution for exemption certificates, there's critical elements that are really important to recognize and be precise about when you're setting up those exemptions. Looking at transaction citing is one of those. So citing rules just implies that there's a need to define or determine what tax is applicable to begin with. If you don't know what tax is applicable to begin with, you don't know what tax you're trying to exempt. And that leads to a disconnect between the exemption certificate and the transaction itself. So it's always important to have some breadth of knowledge to how tax is applied to begin with. And generally speaking, when we're talking about sales of tangible personal property, the majority of transactions are going to fall into a citing rule of ship to address. So on any given invoice, you're going to have a bill to address. You're probably going to have a ship to address. And despite the fact those addresses are different, you're going to default to the ship to address for purposes of citing that transaction for sales tax purposes. The sales tax rules and rates that apply at that shipping location are how you will calculate that tax on the invoice. Now, that statement I just made is predicated on the fact that we're going to assume title is transferring at that ship to address and not prior. That's because the majority of transactions, all of us as consumers are buying things constantly on the web, and those transactions are generally shipped FOB destination. But when you get into large equipment purchases, there can be FOB origin transactions where the buyer is generally or sometimes coordinating or facilitating the transportation of the product. And they're going to take risk of loss at the loading dock or at the shipper's loading dock, and that becomes a FOB origin. And that origin address is the situs for sales tax purposes in those conditions. So it's just important to understand those elements of a transaction and understand where is title being transferred, who has risk of loss, where and when. When you get into services, it's even more challenging because most of the time we will have a ship to address, and in services we tend to default to that ship to address for purposes of citing that taxable service. However, in the world of technology as it is today, we can have a multitude of benefit of use locations. SaaS solutions, software as a service solutions, are a great example of this. You can license or a customer can subscribe to 100 seats, and those 100 seats could be in all 50 states. Those could be users working from home throughout the country. So there can be some real challenges when you get into isolating and identifying the benefit of use jurisdiction for citing purposes. We're not going to go down that rabbit trail much further than that, that could be another 15 or 20-minute discussion, because there's strategies around service citing that you might want to employ. Multiple points of use is byproduct of the benefit of service. And the reason I wanted to bring it up is there are specific states like Washington, most of the states, frankly, that Texas has something similar. There are specific clauses that allow for customers who are going to use a service in a number of different locations or a number of different states. They can actually issue an exemption certificate to that vendor and say, we are going to be using your product throughout multiple states, and we're going to issue this multiple points of use exemption so that you don't have to charge us tax. We will take on the responsibility of accruing and remitting use tax based on where that usage occurs. So that's a real thing that applies and exists. And lastly, drop shipments. This will be another area we won't go down very far down this trail. Drop shipments are very, very common in today's economy. And there are really unique rules that are very specific to each state that can impact a drop shipment transaction from the standpoint of the type of exemption certificate that you need to get from that customer. It also is a challenge even for companies operating in a multi-state environment that are leveraging distributors and having some of their product that they're selling drop shipped to their customer. The short sort of picture that I want to draw here is that if you are engaged heavily in drop shipments, whether you're the distributor or whether you're the retailer, there are some unique opportunities, I'll call them, to express an exemption in certain conditions in certain jurisdictions. It's very specific to the states and it requires some sort of acceptance on both the buyer and seller's part. But it's a challenging area, challenges a lot of people. It's confusing, but if you have drop shipment transactions and you've had some heartburn around exemptions, follow up with us and I think we can get you some help with that. The next category we've talked a little bit about already, the risk of a blanket exemption. And what I mean by that is a lot of times I will talk to companies that are going through due diligence. They're getting ready to sell their company, and they'll say to me, but all of our customers are nonprofits. And I'll say, well, do you have exemption certificates? And sometimes they'll say yes. And it'll turn out that these nonprofits are operating in multi-states. My client is distributing product to them in multiple states. And the reality is they're only exempt in certain states. And so our clients have fallen into the misguided trap of recognizing every customer that's nonprofit as exempt from sales tax, and that's just not the case. So you got to be a little bit careful with that. I already talked a little bit about manufacturers buying a multitude of products, some of which may fit into an exempt manufacturing category, others may not. And then drop shipments, again, is another category. Not only is it complicated, but it can lead to sort of a misappropriation of the certificate to states beyond their legal use. So there's just some challenges there that if you're in that business, you might need some help with it. I think all of this comes back to the more complicated your business structure, the more voluminous your customer base, particularly if you have a lot of exempt customers or customers claiming to be exempt, the more relevant a software solution might be for you.
Yeah, Jeff, you're very aware of the fact that we have some customers that have as few as 25, 30, 50 exemption certificates that is fairly easy to manage without software. And then we have others that have 10,000, 20,000 exempt customers and exemption certificates that you really have to have some type of technology to facilitate managing those in that case. So Kate, I think you've got a polling question to pull up, and then we'll take a look at some questions here. And kind of where I was going with that in terms of, the different volumes of certificates is, there's never a one size fits all type of approach to these situations. It's what's the number of certificates? How quickly do you need to get them into your customer approval process? We were kind of talking earlier about needing to essentially gather and validate something in real time through a shopping cart. That's going to have to leverage technology versus someone that maybe spends a couple of days setting up a new client, reviewing the exemption certificates, issuing an invoice. Very different scenarios there. So Jeff, this is a question from Amy, and this is one that I'm sure you hear all the time, and it's a little bit of, and I don't mean this in a bad way, but a little bit of a sales tax avoidance strategy. But if you've got a customer that arranges for a shipment to be picked up at your facility, at your dock in Georgia, and then they make arrangements to ship it out of state, where does the sales tax apply? Is it in Georgia, or where that equipment eventually gets shipped and put in use?
Yeah, this would be true in pretty much any state. The point at which the customer picks up the product is generally going to be the taxable situs for sales tax purposes. Now, there's a popular, I don't know whether we call it a blog or recording out there that we title "It Depends," and there are a whole host of exceptions to the rule that exist in sales tax, enough to drive you nuts, and believe me, they drive me nuts as well. So depending on certain circumstances, there are opportunities and options that a buyer could carry out in any given state to exempt a transaction where they're actually picking it up at that dock of the retailer or the seller distributor. But generally speaking, the first inclination you should have is, where does title transfer? And if it's transferring at my dock and my customer is facilitating transportation to whatever state they may operate, we can't control where that product's going. We can get some documentation that tells us where it's intended to be going, but there's limitations as to how well we can substantiate the product being exported out of the state. So it's taxable unless adequate documentation is provided. Sometimes that adequate documentation isn't really an exemption certificate, but some form of bill of lading or other transportation type documents, shipping documents.
All right, very good. And another question here regarding the validation of exemption certificates. So if you've got an exemption certificate that on the surface appears valid in terms of it's got all the appropriate information, it's got the sales tax ID, the buyer's name, the state, the reason, all of those different items that you referenced before, it looks like on the surface it's valid. Do you have an obligation to further validate that through the state, where certain states, I believe, have some type of capability to look up, I don't know if it's looking up the sales tax ID number of that specific customer, but what's your obligation there?
Yeah, it's a great question. The level of obligation can vary. As Brian said, there are some states that will actually publish exemption certificate. They'll publish sales tax account numbers, which can be validated by a vendor. I fall on the side of, if you're accepting a certificate in good faith and it has all the criteria that we've talked about during this presentation included on that certificate, there's no reason you shouldn't feel comfortable accepting that certificate. Now, are there scenarios where people may intentionally try to avoid sales tax and issue an improper certificate? And under audit, might the auditor question that validity? Yes, those things can happen. It's pretty rare that happens. It's very, very rare. I mean, I've been in sales tax for 35 years. We see people trying to get things past a vendor by issuing something like a W-9 or some type of form that has no business being issued or accepted as a sales tax exemption certificate. But it's very rare that we see people intentionally trying to defraud the transaction or the vendor by submitting something that looks like a valid exemption certificate, except that it fits into the counterfeit money category. So I would say just make sure the certificate looks valid. It should look familiar to you. You know, if you're registered in a specific state such that you're obligated to comply with their sales tax laws, you should familiarize yourself with their exemption certificate requirements, the forms that they require, and be, you know, just operate with some reasonable due diligence upon acceptance of that. I would not say you have to go to the nth degree to validate.
Fair enough. We've got quite a few questions out here, but some of them are pretty unique and specific that we may not be able to get to here this afternoon. But this one, you touched upon it initially, Jeff, but it's asking if a exemption certificate is required for the purchase of cloud or SaaS-based products in states where they're non-taxable. I think this comes back to the exclusion exemption conversation that you had initially.
Yeah, I think the way I'm going to answer that may not be gratifying. Certainly, if you're selling or someone is subscribing to SaaS in a state that does not tax SaaS, and you know the ship to and presumably the bill to is in a state that doesn't tax SaaS, then you should be fairly insulated from any responsibility to charge, collect any type of sales tax or any kind of exemption certificate. And in those instances where you're selling to someone who you clearly know is using it in different states by way of the invoice itself or the contract, you could put yourself in a responsibility to differentiate the tax treatment of each of those seats on your invoicing. We want to avoid that, and that's where I went to talking about some of the strategies around benefit of use and sidicing. And that's where the multiple points of use certificates might come into play as well. So it's a little bit challenging, to be honest with you. My advice to my clients are, if you're selling to someone and they are telling you their bill to address is in New York City, treat 100% of that transaction as a New York City transaction and tax it accordingly. You really don't want to know that 5 of their users are in a state that doesn't tax SaaS, 5 are in a state that do, and the rest are all mixed up in a bunch of other states. You're going to be very challenged to try to comply with that invoicing responsibility and the taxability of it. So sometimes hear no evil, see no evil is the best approach. And then there's strategies both on the invoicing side, and then there can be strategies that are just the opposite on the auditing side. So for example, let's say I did issue an invoice to a New York City customer and I failed to charge tax on it, and the state's auditing me. I may want to go to that customer and say, hey, can you tell me, were some of your users outside the state of New York? And maybe a lot of their users were outside the state of New York, and maybe those were in states that don't tax software as a service. I can represent that to an auditor and reduce my audit assessment after the fact based on those facts.
A couple of, I think, fairly simple questions, and then I'll have one final one here for you, Jeff. But just for clarity, there are a couple of questions around this. The exemption certificate is completely different from the sales tax license that's issued. So you have that initial registration for sales tax purposes with the state where your sales tax ID or your sales tax license is granted. The exemption certificate, when you complete that certificate, you're required to put that sales tax ID on that exemption certificate, certainly in the case of a resale activity. So it's kind of a precursor to be registered for sales tax to have the ability to produce and issue those exemption certificates. Another question, and I'm guessing this is coming from a non-US based individual that is probably more used to the VAT requirements, where on the invoice you have to show, I believe, the tax ID number of your buyer. So this individual is asking if the exemption certificate registration number needs to appear on the invoice. And the answer to that is no, it doesn't. it's very likely that you haven't, or I shouldn't say likely, it's very possible that you don't see the exemption certificate until even after that invoice has gone out, as we talked about previously or earlier. So the last question for you, Jeff, is from Martha. Talk a little bit about direct pay permits and how that fits into this whole mix.
Oh yeah, that's a good question. It did not show up in my categories of exemptions. Good point. Yeah, direct pay permits are they're not widespread, but they are intended to allow typically a very large and diverse company to self-regulate their sales and use tax, and it's basically at that point a consumer's use tax. So examples of this might be some of the oil refineries in Texas. A lot of them, if not all of them, are registered with a direct pay permit with the state of Texas. And what they can do is they can issue that direct pay permit to any vendor they wish. They don't have to issue it to a vendor. They can allow a vendor to charge them tax, but they can issue that to any vendor they wish. And generally speaking, those vendors would not charge tax on any type of transaction, even though it's obviously a taxable transaction. Now, there are limits to that. Different states have different policies. Not all states have true direct permits that are afforded every taxpayer type. They're very hard to get in most states, a direct pay permit. You have to establish that you have the wherewithal to comply with the consumer's use tax responsibilities. So it's a fairly rare type of form that you would expect to see. And if you do see it, I'm pretty certain you're going to be dealing with a fairly sophisticated customer, very large company, probably very well-known name, or at least in their industry segment, a very well-known name. And yeah, they generally will be a blanket certificate. They apply to everything. There are exceptions to that, particularly in construction. Direct pay permits sometimes are limited in the issuance under construction contracts. But yeah, happy to go into more depth one-on-one with that. But great question and good item to discuss.
Yeah, I think good questions all around. There's again quite a few more in here. I think some of them are pretty unique and specific that will likely require a little bit of back and forth dialogue to get you to the right answer. But we're going to go ahead and wrap up here. Certainly appreciate everybody joining us today, again, especially after a 3-day weekend. So hopefully we're able to share some worthwhile information to you. But look forward to hopefully chatting with you again or seeing you on the next webinar. Thanks, everybody.
Thank you.